What's up, everybody? Thanks for tuning in today. I just want to go over a quick trade with you guys. Today I'm looking at NAS 100, and my bias right now is for a sell. So I just want to give you guys this quick trade. So maybe you learn from it, maybe not. Leave a comment. Let me know what you guys think. So initially, when the market opened, as you guys can see, that yellow line right there was buy side. So I was looking for buy side to get hit. It got hit. Okay, this is the 1 minute time frame. As you can see, that top red box created a fair value gap, and then the market pulled back down again, created another fair value gap. So these are the type of things I like to see. I put my fib down below. The fair value gap at the bottom, I really didn't like it that much because it was actually in a discount from this range. So I really wasn't looking at that fib level yet, but this market did come back down again, made a new low. So I adjusted the fib levels, but as you can see, that level was still like mostly under the 50% level. So it was in a discount zone. So the market, the green boxes on my charts are 1 hour fair value gaps. And if you guys stay tuned, watch the whole video, I'll show you that at the end of this clip. Mind you, this clip is running 3 times the speed because the original clip was about 30 minutes, and I didn't want to post a 30-minute video. I know a lot of people out there have short attention spans and everything else, and sometimes the market is moving very slow. It can get very boring as well too. So I did use a different range to take my first entry for the fib. So I took my first entry right there at that fair value gap. Now, when I was reading price, this right here should have alerted me right off the bell. Price wasn't really respecting this fair value gap the way I wanted it to, but I held on to my trade. I actually used the stop loss for the fair value gap at the top because I kind of like assumed that the market may want to run up there and retest that 1 minute fair value gap again. So, I wasn't really worried too much. I mean, I was in drawdown. This is not what I want to see on any of my entries, but I still had some price action to see. I still had some information that needed to be gained. There was another fair value gap right there, and right here we're looking at an order block, and as you guys can see, where that yellow line is at is pretty much midpoint of that order block, and you can kind of see that once price got up to that order block, it started to respect that order block. So what I wanted to do was take another entry off of that order block. Mind you, you guys, my risk was very high today. I was risking about 2% overall because I was up 4% on my account. So right here is where I take my second entry. Notice how it's hitting that order block. So we go right into that 1 minute fair value gap. I take that, the price comes down immediately. So that's a pretty good sign right there. I am in some drawdown, but that's what I typically like to see. The price started moving in my favor immediately, you guys. And my goal was for price to break through those 1 hour fair value gaps. So those green boxes on the bottom of my chart, those are fair value gaps on a 1 hour time frame. My goal was to see price quickly come down and just keep moving. Now, what had happened was price did started to come down really fast. As you guys can see, I was up $1,000, not long after being in the trade. So far the trade was going very well. And this is why I typically love to scalp. Now, what ICT teaches is that at this swing low right here, you need to be taking something off. And I'll show you guys why in a moment, right? So notice how we get back down into this 1 hour fair value gap. Is kind of like stopping towards this swing low. So it's not really wanting to break that swing low the way I wanted to see it be broken. I wanted to see price just keep going through that. So that was a red flag for me right there. I did not like that at all. But I was trying to be patient. Something that I don't normally do, and this is why I'm a scalper. So as you guys can see, I was up 2,100, 2,200. But, I was trying to be patient with this trade, but I'm up about, 30 to 35 points already on this trade. So it's not bad. In hindsight, I should have closed it. So, or at the very least, I should have scaled something off the top and then put my entry back to break even. that would have been another thing I could have done to manage my risk a lot better. But like I said, as you guys can see, that swing low wasn't really being violated the way I wanted to. So in my mind, during the live markets, I'm thinking, hey, maybe we can go back up to this fair value gap right here, touch it, and then sell off again. So I'm waiting to see what price is trying to tell me. But so far, I'm not really a huge fan of it. And that, you guys can see, I'm looking at my trades. I'm even thinking about closing them because for the most part, I love to scalp. And, the market just gave me a quick 35 points. Normally, I would take it. Normally, I would take that. But like I said, I was looking for the market to have a bigger move to the downside today. And I was wrong, And this is why risk management is so important, because you guys will see in a second that, price started to come back against me. And I started to freeze up, because I was in class. I was like really busy. I was just looking at my screen and I was up 2,200. Now I'm back to break even. So I started to freeze up. And that's a rookie move. That's a rookie mistake. I'm not perfect. I still make mistakes. That's why I'm making these videos, to show you guys the ins and outs. I want to show you guys the wins plus the losses. Okay, so that's pretty much what had happened. So as you guys can see, it went back into that fair value gap. It respected the midpoint of that fair value gap. So that red box, that dotted line is the middle of that red box. So it started to respect the midpoint of that fair value gap. So now I'm thinking, okay, in order for me to really feel comfortable now, I want to see price rapidly go to the downside. So I was being patient once again, being patient. But, price isn't really going rapid. Mind you, I speeded this up 3 times its original speed. So price wasn't really giving me that fast movement that I wanted to see. And I didn't do a good job with adapting to that. I was trying to see if it was eventually going to just break away and go through, but it never did that. So if you guys are ever trading, little subtleties like that is what's going to make you a very good trader. And that's also going to help you read price action. I mean, it's something that's so basic, but it's so helpful when it comes to reading price action, because, I honestly thought about getting out. Like right here, I'm checking my profits and I'm thinking to myself, man, maybe I should just take this 1,700. That's a pretty good trade. I'm up 1,700 already. I could be done for the day. But, I got a little greedy. I got a little patient. And this is why I always tell people, when you're learning ICT concepts, take profits. If the market give you 30, 40, 50 points, just take the profits, because you're not skilled enough to try to always hang out and wait for those big moves. Even me, I'm not skilled enough. I'll admit I'm not skilled enough to always get 100 points every time I trade. So what I do is I take 30, 40 points and I'm grateful and I'm gone. I can enjoy the rest of my day. Now right here, I should have been getting out the trade right here. Okay, because I know that if the market is coming down, it should not be doing all of this back and forth. Okay, it's respecting that 1 hour fair value gap too much. Okay, and if that wasn't an indicator, once I seen that short-term high get broken right there, I should have instantly closed everything, like fast. But as you can see, price was moving fast. I even thought about closing right there. Look at that. I even thought about closing, but I didn't close because I was up 2,200. Now I'm down 400, and I was just emotional. I was mad about that happening, and I was like, come on, man. The market is going to really do this to me. That's how I was feeling. I'll be honest. So I'm looking at how much I'm down. Even right then and there, I was thinking about closing. The market has given me all the information that I need to know that, hey, you're on the wrong side. It respected that 1 hour fair value gap. It came up. It created another fair value gap on the 1 minute. And as you guys can see, it's moving fast against me now. But I'm still waiting. I'm pretty much frozen. I'm in class. I'm looking at the phone. I'm trying to take notes. I'm a lot was going on at one time. Even right then and there, I could have taken a $1,100 loss, and I would have been great. But I did not do that as well. And I made a lot of mistakes, you guys. I even moved my stop loss on this trade because I was hoping that, hey, maybe it's a turtle soup. Maybe it's just going to go sweep the high and come back down again. I'm trying to share this with you guys so I can let you guys know that these are the things you do not do as a trader. Do not move your stop loss and always listen to what price is telling you. But luckily for me, I bounced back, and I'm going to show you guys how I did that. So after I got stopped out, this is how much I was down on the day. I was down about 3,800. And on a 100K account, I think I had about 1,100 or so that I could risk. So I kept trading. I wanted to crawl back out the hole just like any other degenerate. So I kept trading. I started to climb back out the hole. And this how the end of my day went, you guys. So real quick, I want to break these trades down that I took after that loss so you guys can see how I came back. So the first thing I want to show you guys is, let me first take you guys to the hour chart. The 1 hour chart, as you guys can see, those two green boxes at the bottom of the screen, that's where the 1 hour fair value gaps were at, the ones that I was telling you guys about. So what I'm looking at buy side. My initial plan was for the market to go up, take buy side, and then come back down. So I was looking for it to go outside of the range, and then at the very least break through those green boxes right there, the 1 hour fair value gaps, and then come back down into the red box that you can barely see on the screen, but that's also a 1 hour fair value gap coupled with a 4 hour fair value gap. So the plan after I seen the market break past the buy side was for either it to just break over buy side and sweep that liquidity and then drop all the way back down into that 1 hour fair value gap that I was showing you guys right here. That's also coupled with the 4 hour fair value gap, that red box. That was the initial plan that I was having, but I also knew that the market could go a little bit higher. So the second plan I had was, I'll show you guys here in a second. I was looking for maybe like the market to break the buy side, create a high, and then for it to sweep buy side again, and then come back down and sweep all of those lows in there like that. The second plan, it actually happened. Technically, the first plan happened as well. I just didn't take my profit. So there will be like a fair value gap somewhere in there. And this is normally how this pattern works. ICT teaches this on his channel. It creates a high, then a low, and then it takes the high out, and then you can look for a sell or a fair value gap to be created, and then you look for a sell. And I'll show you guys a example of this pattern right here. These are the actual trades that I made. ICT classifies this as a breaker block, and it's coupled with the fair value gap. And you could also buy the break above the high, which is the turtle soup. So there's plenty of different entries you can use, but I'll show you guys how this pattern look. And these are the actual trades that I took to get my account back down close to break even at least, okay? So that pattern I just showed you guys is a high. This is the first high, swing high right here. A low, this is the swing low. And then this high right here breaks that second high, and then price shoots down, okay? So I will show you guys the swing low. I'll show you guys the swing high right here so you guys can see what I'm talking about. I know that there might be some new people out there, so I want to kind of like talk to people that may not know some of this stuff. So when this swing high is being taken up top, that was my first trade right there. And I made about 1,200 on that trade. And that is ICT's turtle soup pattern. So that was one of my first entries. I sold that down all the way down to that swing low, just about. Maybe, I don't think I caught the exact low, but it was somewhere down there. And then when the market started to pull back, I had more entries as well, because as I told you guys, when the market does this, normally it creates a fair value gap. Okay, so the fair value gap will be somewhere in there. You can't see it on this time frame, but if we switch to a 2-minute time frame, then it will be easier for you guys to see it. So just let me zoom in real fast right here. And then I will place a zone over this fair value gap so maybe you guys can see it better. So this fair value gap right here, remember I just showed you guys the pattern. It created a fair value gap. So when the market decided to retrace back into this fair value gap, I placed another entry about right there, and I sold that one down as well. I had about 2 entries in on this position, and I can't remember exactly how much I made on that position, but I'll insert a screenshot of the trades that I had on that position as well. And then this was the last entry that I placed right about here. It did not go down as far as I wanted to, but I took a little bit of profits on that trade as well. So as you guys can see, you know, sometimes when fair value gaps are created, the market will price into those fair value gaps multiple times, giving you multiple chances to make money from those entries. So these were the trades that I took to get my account back to not quite break even, but I'm down $260 on the day, and I'm still up about $1,300 on the week.